Hello, everyone. Hey, Greg Harrelson here with Century 21, the Harrelson Group, with my co-host Abe Safa, also with Century 21, the Harrelson Group, and we're here on another Myrtle Beach Real Estate TV update. We're going to give you an update as to what's going on in the market. So first off, Abe, thank you again for joining.
Always a pleasure, Greg. Another
Yeah.
week.
Yeah. Some of you may have noticed in the title, we use the word stabilization. So, Abe and I want to just have a brief conversation before we get into the details and the numbers about stabilization phase. What is a stabilization phase? And I'll start off with saying that we've really been in a breakthrough phase. I mean, where the market has just really broken through and reached levels that a lot of us really didn't anticipate. I mean, I think we were very bullish on real estate. We were very optimistic on real estate. But quite frankly, over the last 6 months, 12 months, we've kind of been surprised ourselves at some of the peaks and some of the price levels that we've reached and inventory levels that we've reached, or the lack of inventory, that is. So I would call that kind of the breakthrough, where we're just breaking through, setting records. Right now, we're seeing more of a stabilization phase, which is we're not necessarily seeing a breakthrough again in higher highs as much as we were. We're also not really seeing lower prices or lower inventory. As a matter of fact, Abe, you might even show that inventory went down just a little bit. What we're really seeing is more of a stable market. So we're kind of like stabilized at a high level, and it's kind of flat. But sometimes people hear flat and think negative. Flat at a high level is really good, right? That's really good. And that's kind of what we see right now. We call that stabilization phase. Any thoughts on that, or anything you want to add to that one?
Yeah, I mean, that's a good distinction. I think I like the word stabilization as opposed to flat. Because when people have a meaning of flat as not good or kind of soft, and the market is nowhere near soft. It's still a very strong seller's market by all means. But it has stabilized. We're not seeing the just that crazy decline of inventory that we've seen for the last 12 to 18 months out there.
Yeah, and I remember the last significant market cycle back in 2006, 7, 8, 9, and all that time, where we had pretty amazing growth, and then we had a very minor flat time, and then we had like a massive decline. And I think that's why I'm careful to use the word flat, because I think people think like flat is a transitional. It's a place where one transitions from hot to cold. And I don't think that we're there. I'm just thinking that, hey, we have done very well. We're not seeing as many records being broken again on pricing, but we are seeing things maintain a very high level. So I like that.
Yeah, I do want to emphasize that, because a lot of people I'm talking to nowadays are starting to bring up the conversation, that the market is softening. So the word is getting out there. The news is all around the country where everybody in the media is saying that the boom is over, the market's softening. So people are initiating that conversation with me a whole lot more. I do want to emphasize that we have not seen a change in pricing in our area.
Okay.
So yes, there's some indicators showing that inventory it has started to grow a little bit and then flattens out, but still kind of growing slightly, but not at a pace enough to impact prices. So prices are still very good for sellers out there right now. Yeah. Now, granted, we're not getting the overbidding. We're not getting the 10, 15 offers driving the price, 5, 10% above asking as much. Okay. But people are still coming in fairly strong. They're still coming in very close to asking, if not full price on many properties right now. So we're not seeing prices go down.
Especially as of now. I was going to say especially residential, but the reality is what I have seen, and I don't know if you've helped any clients in the last 30 days in the category of larger oceanfront condos, like say 3 or 4 bedrooms, the larger condos like an Ocean Bay Club, something like that, Emerald Cove. I mean, there was an Emerald Cove I'm working on right now, but the previous one, the previous sale was, I think, $489. Mm-hmm. One went on the market at $550, and it went under contract within like 4 or 5 days.
Wow.
A Regency Tower which has been really slow for many years. One of those units priced at $50,000 over the last sale, went under contract immediately, and that unit wasn't even really updated. So I'm seeing kind of a run on the larger units right now, 3, 4, 5-bedroom units, not many fives, but 3 and 4 bedrooms, especially 4s on the oceanfront. They're setting some records right now, and there's just no supply.
Yeah, absolutely. That's a great point. And we feel it now. You pointed out like Emerald Cove, Xanadu, places like that. They don't have a lot of inventory that hits the market in general.
Mm-hmm.
So yes, when a unit does hit the market, that's a 3-bedroom. There's a good bit of demand out there for those types of properties within those buildings because they don't get many opportunities to buy them. So I can see how those prices are being driven up. But 3-bedroom condos across the whole oceanfront have done better.
Yes.
You know, places like Paradise Resort, you know, Breakers, you know, 3-bedroom units, Baywatch, things like that. Those are doing much better than they have in the past now all of a sudden.
Yeah. Well, cool. Well, you know, before we get to the numbers, Abe, I think something that might be neat is we may want to choose a few areas that are not doing that well, maybe that are lagging in the marketplace. You know, we know some of the lower end condos have a lot of efficiencies and things like that. And maybe we could just kind of give a few examples and see the difference in like why this building is lagging and this building is taking off. Obviously, it's going to be demand, supply and demand is really going to be, but we could maybe give them a little bit more of a pinpointed example of how we could go and compare building versus building.
Yeah. You want to do that next week?
Yeah.
Okay. Yeah, I like that.
Yeah. So let's check out the numbers.
Yeah. So let me go into market stats real quick. This is something that I look at on a regular basis, and just to kind of get an idea of the overall market. So here we're looking at single family homes previously owned and the monthly supply of inventory. Again, I'll point to back during the recession, 21 month supply of inventory. And then you can see that number just kind of go down and down, and then it kind of flattened out here. Okay. But then here, this is where, you know, back in April of 2020, we had a 4.6 month supply, and it just the bottom just fell out. So month after month, everything started being bought up. And then it got all the way to 1.3, 1.1. And then here, so this is back in April. So as you remember, Greg, April, May was probably the hottest part of the market out of this whole 18-month period that we've had. Stuff was just crazy how quickly it was selling. And then it started to kind of slowly starting to soften. So for 1.1, we want to stay at 1.1 in May, 1.2 in June. This is this is a month supply of single family home inventory. Then last month and in July, I went to 1.3, right? So we've been talking about, you know, we've kind of stabilized. We started to see inventory grow a little bit. And then look at what happened here. So end of August, it drops back down to 1.2, right? Not a significant drop, but, you know, but when you see it increase 3 months in a row, you kind of expect it to keep that trend, and all of a sudden it dips a little bit more. You know, so it's hard to pinpoint exactly what's happening in the market. You know, looking at data, I'm still seeing homes when they hit the market, if it's a good quality home, priced well. Not when I say well, I don't mean like underpriced, but priced according to what the market value. Not sellers saying, well, look, my home is worth 400, let me price it at 550, right? They're selling fairly quickly still. A little bit longer, a few more days on the market. Like I just sold a home in Market Common at Sweetgrass, and it took 7 days. When back in April and May, it would have been gone the first day, right? So, but not a significant change, but it, you know, some sort of stabilization. But I thought it was really interesting that it actually dropped back down again, inventory. So we're at 1.2 month supply of inventory.
Yeah. And, you know, and until we start seeing like 2-3 months,
right,
there's not going to be much of a difference. So like these 1.2, 1.1, 1.3, even though we're looking at them, the reality is the consumer's not going to see any difference on the marketplace. The buyers are going to say, gosh, there's just nothing for me to buy. And the sellers are going to think, gosh, you know, there's no inventory, so I can price it a little bit higher.
Right.
You know, until we start seeing, you know, that move into 2, 3, 4 months, we probably, well, when we see 4 months, the news will be saying the bubble has burst. So even though 4 months would still be a seller's market, I can promise you that the news will be screaming doom and gloom. But I do think even if it went to 2.5 months, I don't think that we would see much difference in the marketplace. I think we would see a lot more transactions going on. But I don't think that, necessarily prices would start going down even with 2.5 months of supply.
100% agree. That's a great point. And number of closed sales last month was down, but I think mostly as a function of lack of inventory, not so much buyer demand. There's still a lot of buyer demand in the area. So this is that same chart over a 1-year period. So when you look at it, it looks a little bit flatter. And then if we look at it, 3 years, you'll see how it just dropped and then kind of flattened out. But that's a good point, what you just mentioned. Looking at condos real quick. Again, this is previously owned townhomes, condos. Let's look at a maximum. Man, condos have just been nuts.
Yeah.
Now we're less than a 1-month supply. So that one, unlike homes, hasn't really bottomed out yet. So we're down to a 0.9-month supply of condos right now in the market. And it's slim pickings out there. I know, like Barefoot Resort right now.
Oh yeah.
I've got multiple buyers waiting for a first floor unit to hit the market. As soon as it does, they're going to jump on it. So things like that. Barefoot's just been on fire. River Oaks has been on fire. And just about every place on the Jasmine Lakes, anywhere that's off the ocean front, on a golf course especially, has done really well.
Yeah, that's good.
So those are the two things I'm looking at constantly in market stats. And to go into the regular numbers that we look at, let me pop those up real quick. Still holding strong single family homes, just under 67%, pending to actives. Resale, that number, it dipped a little bit. It dipped to 58%. I think last week, or it stayed around the 58%, and then just jumped back up to 59%. So you kind of, like you're saying, it's kind of going that back and forth right now. Just
well, the number's never going to stay. The number's never going to be exact, because just one pending or one listing closing changes the number, right? So it's very rarely it'd ever be an exact. But I think it's when it starts bouncing outside of like a 5% in either way, it's kind of more noticeable.
Yeah, like one indicator I really take a look at, Greg, and I'm sure you look at this as well, is number of expireds.
Yes.
Right. So today's the first of the month. So first of the month is always typically a big day for expireds. That's when a lot of properties come off the market. This morning there was like one condo and one home that came off the market as an expired listing, which typically, September 1st, we could be looking at 40 condos and probably 40 homes is what it would have been, a year and a half ago.
Yeah. They're already they're pending. There's nothing to expire. There's not even hardly any inventory, let alone expireds.
Right. Condo market still holding strong, extremely strong, 66.7% across the board. Off the ocean front, you'll see that number is even stronger. They're in the 70s, 74.26%. So that only gives you 300 condos available for sale in the entire market right now. That's not on the ocean front. Extremely low numbers still.
Yeah.
On the ocean front, same story, still holding very strong, 55.75%. And then when we look at land, again, pretty stable, 21%. So not a whole lot of change from last week's numbers that we did, Greg, when it comes to these stats. Stuff is still selling out there.
Yeah. That's good.
We just need some inventory.
Yeah. It's if you're on the fence, if anybody is on the fence of selling a home, condo, piece of land, I'll tell you, you need to reach out to us and just let us evaluate the pricing. And it's up to you to decide whether or not the price is the level that you want it to be in order for you to make a move or to sell that property. But it's if you're on the fence at all, you should at least look to see what the prices are. I've got a friend, and I just happen to know that he bought a condo back in 2006, and that person has a mortgage on still today on the condo of around $350,000. And 3 years ago, I was gonna try to sell it for him at probably I'm guessing $270. And we couldn't get it sold. And that would have meant that he had to bring almost $100,000 to the table to pay off the mortgage. Well, there's a strong possibility right now that I can sell this condo and net him enough money to pay off that mortgage. And he's been losing money for years on this condo because he didn't want to have to come to the table with a lump sum of money to pay off the mortgage. And now there could be a window of an opportunity where we can get that done. He can pay off the mortgage and be done with it and put a stop to the losses. So there's a lot of people that still own properties that purchased back in 2006 or 7 or 8. And for them, they may not know this is an opportunity to get out of that investment at this point, assuming that there's some negative cash flow there. So I don't assume everyone's in that situation. But if you're in a situation where you haven't been able to sell because of the mortgage that you have on that property, you may want to reach out to us because that number might be higher than you know.
No question. A lot of scenarios right now where people have had negative cash flow year after year for the longest time. And this is an opportunity to stop the bleeding. Take that money, reinvest it somewhere else instead of having a loss every single year.
Yeah. Well, good. All right, man. Well, thanks. Hey, please reach out to us, Greg Harrelson and Abe Safa. You see our cell numbers right there on the screen. If we can help you out in any way, buying, selling, or just providing information, we will be happy to do that. We'd love to earn your business someday in the future. All right, Absolutely. Abe, we'll see you next week.
Take care.
Bye.